Let's go to our next retirement readiness statement, which is number 5. I have a plan to minimize the impact of taxes and inflation throughout retirement. Oh, what a heavy topic. As we stand today, we're at that $20 trillion worth of debt in America, and our two ways out of debt, historically speaking, are for the government to raise taxes or to inflate money, and we're able to carry debt easier in those two functions. Well, you find that here, those are your two enemies as you step into retirement. So you need a strategy to prepare for those functions. I have on the screen here a tax rate. So what we find is the greater your income, the higher percentage tax you pay on those dollars. And as you're withdrawing your TSP in retirement, on top of your pension, Social Security's other income sources, will you be in a lower tax bracket? Or will you find yourself paying taxes as you are today? Be prepared as you're saving your money. Be prepared for the withdrawal stage. And by that, we have a lot of information at retireinstitute.com and can help you understand how the Roth TSP can work to be potentially a support for you in your retirement withdrawal strategies. But don't close your eyes to the idea that taxes may be as bad or worse for you later. Stop and think about those effects long term, and I think you'll be wise to consider diversification of tax planning as you step into retirement. Roth, just in brief, here's a nice little picture for you. Money goes in after tax. You can put it in the Roth TSP, Roth IRA. You can invest it however you would like, and the money can come out tax-free. When that money comes out tax-free, does it matter what the tax rates are? No, it doesn't. You've already paid your tax, the growth is tax-free, and it can keep control of your future tax rates. So we encourage you to consider Roth as you're thinking through. The other enemy that I spoke of was inflation. What were you paying for a stamp 30 years ago? You don't remember because it slowly crept up over time. Well, here it is. You were paying 22 cents for a stamp, and now 50 cents for a stamp. Over twice the cost for that stamp. And that would be true of anything that we looked at. You would find substantial increase in the costs of daily living. And you know you've experienced that if you think back over 30, 40 years. If we expect that to continue for the 2 or 3, 4 decades that you're going to live in retirement, then you need to make sure you've factored that into your planning. You're prepared to address inflation as you move forward.